Speaking of stocks, our team is standing by with the list of top stocks to watch out for this Friday, and plenty of them out there. Let's kick it off with Vivek. He was the one who was always alerting us about the possibility of this Kesoram Ultratech deal, and Vivek, it's finally happened.
Well, absolutely right. Last week, Nigel and me had told you about the possibility of this particular deal fructifying quite soon. And along expected lines, it's a confirmation of a CNBC TV 18 news break. What actually happened is that yesterday, Ultratech has announced the acquisition of the cement assets of Kesoram Industries. So Kesoram Industries will demerge its cement business into Ultratech Cement. Ultratech Cement will issue one share for 52 equity shares of Kesoram Industries, which basically goes ahead and values Kesoram Industries shares at 173 rupees a share, indicating upside of close to 24.5% to yesterday's closing price. So now this particular deal has been done at an enterprise value that we worked out to close to 7,500 crore, as Ultratech Cement will assume a debt of close to 2,000 crore of Kesoram Industries, and EV per ton, therefore the valuation works out to close to $85 a ton. This is on a blended basis, slightly lower, so that's quite positive for Ultratech Cement as well compared to the recent deals. So what does Ultratech Cement get? 10.75 million tons per annum capacity, and this will also give it presence in the western as well as the southern markets. So positive deal for Ultratech Cement as well. At close to $100 a ton, they are getting almost 10.5 million tons capacity and significant presence in markets as well. Analysts are quite positive on this particular deal. We'll watch out for both Ultratech Cement, Kesoram Industries today, and also there could be a rub-off on other cement stocks as well, especially in the mid-cap space.
Okay, well, there has been so much action in the cement space, right? Perhaps a lot of people saw this coming. We will be speaking with Rakesh Arora of GoIndiaStocks.com in just a while from now to discuss more about this deal, the kind of positive this means for Ultratech Cement. More on that coming up. But Reema's joining in. She has a couple of more stocks on her radar. Reema, good morning.
Hi, good morning. So let me start with Protein eGov, which is a new listing. The company has reported their Q2 numbers. This is the first set of numbers that the company has reported post-listing, and it looks good. The company's top line has grown by 7% quarter-on-quarter. On a year-on-year basis, the revenue growth is more than 30% in the first half of this year. H1 FY24, the top line growth is close to about 36%. Margins are stable at 15.5% sequentially, though it has dropped on a year-on-year basis. The company has also indicated that they are incorporating a subsidiary in UAE for their international business, and they have planned an additional investment of up to 15 crore for the ONDC, that's the Open Network for Digital Commerce. SIS is the other one I'm looking at because the board met yesterday. It's a 90 crore buyback, a tender buyback that they've approved at a price of 550 rupees per share, which is about a 13% premium from where the stock closed yesterday at 486. Back to you.
All right. Reema, thanks very much for that. Let's move on. Upasana is standing by with details on Whirlpool and HAL. Upasana, morning.
Whirlpool Corp, the parent company, intends to reduce stake in Indian Arm by 24% from 75% in one or more transactions to repay its debt. The proceeds are expected to be used for a debt repayment of almost $500 million term loan that the company expects to pay in Q4 FY23. The parent company continues to see India as a significant marketplace for growth, an integral part of company's growth strategy. It remains committed to expand business in new product launches and recently acquired Elica India business, and it has also stated that it does not anticipate this announcement to impact previously issued full-year guidance. Next up is HAL. Defence Acquisition Council has approved capital acquisition proposals worth almost 2.2 lakh crores, while DAC has accorded acceptance of necessity for Indian Air Force and Indian Armed Light Combat Aircraft for Indian Air Force from HAL.
Okay, so we'll watch out for this one as well. Thank you very much, Upasana, for that. Sonal is with us. Sonal, why are you watching out for SRF?
Well, SRF held an analyst meet yesterday, and some of the takeaways were important. They said they believe global inventory destocking is coming to an end right now, and from early 2024, the specialty chemical segment should normalize, and they will see normal numbers coming back. However, they believe that pressure in packaging business that will continue for next 1 to 2 years, something that they said after their Q2 numbers as well. Refrigerant gas volumes, they will be impacted going forward because of higher supply coming back. supply, because higher demand of the particular product, but prices is something that will keep this particular pricing firm for them as well. Currently, business is skewed towards agrochemicals, which is more than 90%, and they are seeing more traction in the pharmaceutical business, which will be around 15 to 20% in next 4 to 5 years. However, analysts are not very positive on the stock. Jefferies says they await favorable risk reward before potentially considering turning more constructive on the stock. The target price is 1980, which is around 20% lower than the current levels. They have a hold rating. Centrum says that they do not see any material triggers in the near term. They believe the upside is capped. They also have a reduced rating. Motilal Oswal also has a neutral rating on the stock with a target price of 2,220. So the management commentary did not get in any confidence with the analysts as well.
Okay, Sonal, thanks a lot for that. Let's move it across to Vivek now. He has some more stocks in the news. Vivek, over to you.
That's right, quite a few stocks on our radar. First on our list, Sterling and Wilson Renewable Energy. Some positive news flow coming in there. Remember, the company earlier had updated on an indemnity agreement that they had signed, with some of the promoters, including the Shapoorji Pallonji Group as well as Reliance New Energy. So there was a total claim of over 418 crore with Mr. Khurshid Daruwala as well as the Shapoorji Pallonji subsidiary. So now what has actually happened is that one portion of this particular indemnity has been repaid by Khurshid Daruwala, that is almost 75 crore, and there has also been a commitment from Shapoorji Pallonji and Company Private Limited, the subsidiary, to repay the remaining part. So it's a positive new development as far as Sterling is concerned. The other stock on our radar is ITD Cementation, a large order win coming in over there. The company has received a new order of over 1,000 crore. This is for a project in Andhra Pradesh. The project is a 500 megawatt hydel power project, and this is for a pump storage project in the state of Andhra Pradesh. And lastly, some slightly negative news flow coming in for MOIL. The company has gone ahead and cut prices of all of the ferro grades that it is present in. There has been a price decrease by almost 5%, and also the basic price of electrolyte manganese dioxide too has been trimmed further.
All right, thanks a lot. Very helpful there, folks. Here's a quick recap in case you missed out on any of the stocks with positive news flow. Ultratech Cement, Kesoram Industries, HAL, Protean, eGov, SIS, Sterling and Wilson, and ITD Cementation. While stocks with negative news flow, Whirlpool, MOIL and SRF. But let's also take it straight to Manisha Gupta to find out what's the action been like in the commodity markets. Manisha, good morning.
Morning, Sonia. Thank you for that. I'll start with the crude oil prices, which have seen slipping of 2.5% overnight. This is after the OPEC meeting. And the crude oil prices with this decline are headed for a second monthly decline. Well, the street was expecting a deeper cut given the recent price declines, but that is exactly what we did not see coming in from OPEC and allies. So we have the voluntary output cuts for the first quarter of 2024. So it's a short-term measure from OPEC. And at 2.2 million barrels per day of a cut, it's a very small cut as well, which may perhaps not make any impact as well. Apart from that, the markets also are looking at weak China PMI data. We have the U.S. production, which is at record highs, and the inventory is increasing as well. So all that initial concern about looking at a deficit in the last quarter of this year and the first quarter of 2024 clearly have been faded now. Markets are anticipating a surplus in this quarter and the next as well. And similarly, you have the price forecast as well coming down in case of crude oil prices. The street anticipates that you could be looking at $75 to $85 a barrel of a range for the next couple of months for crude.
All right, Manisha, thanks very much. So oil is down, even though output is also down, right? Will it last is the question. We'll take a quick commercial break here. We'll come back. Ajay Bodke will be with us with some fundamental stock talk. We'll also, by the way, a little later after that, connect with senior journalist Sanjeev Srivastava to discuss the exit poll numbers for the state elections which were released yesterday. Stay tuned.